Hello and welcome to this Diwali special co-presented by Motilal Oswal. I'm Nandita Khemka. Well, over the last year, we saw a phenomenal 30% rally on the Nifty, driven by strong domestic liquidity, retail participation, robust flows into equity mutual funds and record SIP flows. But as we step into Samvat 2081, we are faced with a reality check of sorts. FIs have been selling relentlessly and earnings have been disappointing. So what's the outlook looking like for the next year and which are the sectors and stocks to watch out for? To talk about all this, I'm joined by Siddarth Bhamre, who's the Institutional Research Head at Asit Mehta Investment Intermediates. Siddarth, great to have you on the show. As always, we've seen a lot of ups and downs in the market, right? And although we've seen a phenomenal return on the index level over the last year, right now things are looking a little somber. We've come off quite a bit from record levels, 5 to 7% or thereabouts. But here on, should one, temper their returns expectations over the next 1 year? And would you call this a healthy correction that was waiting to happen?
Good morning, Nandita, and thank you for this wonderful opportunity. Nandita, see, I won't say it is healthy or not healthy because it depends, who's invested, how much, and where. And this correction has not been very broad-based. We are seeing some of the pockets correcting big time. So one should, definitely not expect the kind of summer we saw last year. We had seen phenomenal growth in markets, in portfolios, and now some reality check is happening. And market has been at such a situation, Anita, that the room for disappointment has been very less. And even after this correction of 5-7%, which you're stating from the top, we are not at a zone where one would say that this market is inexpensive if earnings don't support. So I think it's going to be very interesting year, according to me. I don't want to paint a negative picture. I think it's going to be a stock pickers market and a bottom-up approach, which has actually taken a backseat since last 2-3 quarters. I think that would come into forefront, and it's going to be interesting time for people who can do bottom-up research and identify names. And it's going to be a wonderful time for people to outperform market, because generally what happens when markets are going in one direction, it becomes difficult to outperform. But if market is stagnant or probably offering you some correction, that is the time men are separated from boys.
Point taken, Siddarth. But going forward, we can see quite a few risks on the horizon, right? We've seen what's happening with geopolitics. FIIs have been selling incessantly, and China is also emerging as a risk factor. But earnings, that has been a major disappointment as well. We've seen brutal reaction to even the slightest miss, right? So going forward, what are the key risks that one should be watching out for, in the next 1 year?
Nandita, you are right. I think it is undeniable that market, ran well ahead of its earnings. And though, earnings were playing a catch-up role in last few quarters, but the start of this quarter has not been very encouraging. And that's the reason you have seen that be it a large cap name or a mid cap name, a double digit correction has not been surprising. So I think the biggest risk to this elevated market remains earnings disappointment. And looking at how some of the companies have reported, it seems that we are not going to have a great earnings season, at least for this quarter. I'm not forecasting that the same kind of situation would remain for next few quarters, but this quarter looks like it would be quite tepid. Yes, geopolitical risks are there, but India as a nation has positioned itself quite clearly, and we haven't seen the major risk because of geopolitical issue for India has always been the rise in crude oil prices. Even despite a couple of places when war-like situation did emerge, we didn't see crude oil price going significantly higher than what RBI has mentioned in its report as a comfort level for the economy. So I believe that is not a major risk as such. Yes, if there is a disruption in some supply chain, which would lead to rise in inflation, that probably would augur some disturbance to our economy as such. But I think the main risk to this market remains earnings, and that is where one should focus on.
All right, earnings rather emerging as the key risk for the market going forward. But let's talk about sectors and stocks to watch out for in the new Samvat. While defense as a story may already have played out, given the kind of correction that we've seen, in this pocket, which are the other themes that have the potential to dominate in the coming year?
Interestingly, we have been working on few spaces, and the initial results from FMCG spaces mentioned that how the demand from rural economy has been fine, and it is the urban consumption which is probably taking a backseat. Uh, we are quite optimistic on a couple of themes, and first theme being the paint space. Now, in paint, what we have seen that the space has underperformed in last couple of years. Rise in raw material prices, consumption has been less, margin has been disappointing, and there has been pressure of competition of new players emerging. Having said that, companies have absorbed all these shocks wonderfully, and now we are seeing margin bottoming out, sales number coming out well. And more importantly, as I mentioned earlier also, that earnings will determine and valuations would determine how markets would shape up. And this is the space which offers very comfortable valuation. So paint space is something which we are liking. Insurance space is something, life insurance space is something which we are liking, Nandita, and which would suggest that these two things should be part of the portfolios. We also like some mid-cap banks, to name few.
All right, let's then break it down to a certain or specific stock ideas. Your top 2 to 3 stock ideas for the new Samvat and the rationale behind it.
Sure. So, auto space has been in limelight for, I guess, for not so good reasons, but we are still very optimistic on Bajaj Auto despite street feel that it is quite expensive. I think the growth levers in Bajaj Auto are pretty high, or numbers are pretty high. And we believe that from current levels also, Bajaj Auto looks pretty decent. Yes, valuations are aggressive, but we have, revenue visibility and growth visibility, and one has to pay price for it. So Bajaj Auto are preferred by among mid-cap banking space. We have seen that City Union Bank has surprised on the upside because of rise in margins and bettering asset quality. So that stock remains as one of the preferred by. And as we were talking about paint space, I think Kansai Nerolac, which has blend of decorative as well as industrial segment, that is also offering good value for investor to create some buy positions.
All right, those are the stock recommendations for the new Samvat, the top ideas rather for the new Samvat. With that, Siddarth, I would like to thank you for taking out time and joining us and sharing your perspective with us. From me and the entire team, wishing you a very happy Diwali and a very prosperous new year ahead.
Thank you, Nandita. Wish you and your entire team and viewers the same. Thank you.
On that note, wishing our viewers a very happy Diwali and a very profitable Samvat 2081 going forward. Stay with Money Control for more ideas and more perspective from top market veterans.